Good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, December 21st. Had two trades, which is a correlation trade between euro yen and dollar yen, although we treated it more as like a correlation scalp or correlation swing. So we took we took bigger size than we normally take on just a regular correlation, but not full. We were 40% in euro yen and 30% in the dollar yen. We will go over that in a minute. First, economic news. Everybody out there is talking about Dow 20,000. We're about 50 points away this morning. You can't turn on TV without someone talking about it. You can't go for a drink somewhere without someone saying, wow, Dow's almost 20,000. Maybe it'll do it later today or tomorrow or whatever. What they're missing, though, unfortunately, is that investors around the world, since the election, are down $1.2 trillion in assets. Just because the Dow is rallying, you have to realize that the bond markets around the world are getting crushed. Bond markets are bigger than equity markets. There's other equity markets that are rallying as well, but the bond markets are bigger. So it's to the tune of $1.2 trillion that people around the world have less money by 1.2 trillion, which is a staggering number. That's with a T, trillion, just in case you didn't understand. Existing home sales came out this morning. It surged to 2007 highs despite rates going up, mortgage rates going up, and mortgage applications collapsing. So obviously, it's a wrong number by the government. Yesterday, we just mentioned that there's a economist, I don't remember his name off the top of my head, 45 years in the business, is saying that to get ready for a bankruptcy of the country of Italy, that it's the most telegraphed bankruptcy he's seen in his 45-year career. Well, this morning we find out that Spain is in massive trouble, and their banking system there as well. So now you have the bloodbath spreading to Spain. And also Italy approved that they can use $20 billion of taxpayer monies to try to boost up their banking system. The problem is their banking system is in the hole by $360 billion. So even though they're taking $20 billion from taxpayers, it's not even 10% of what the overall problem is. And the other thing we wanted to point out, the ECB, this is amazing, the ECB, their assets on their books since they've been doing QE has now hit 35% of the entire Eurozone GDP. As a matter of fact, the ECB owns 9.2% of European corporate bond market. And we jokingly say the Fed and other central bankers are trying to monetize bond markets, and even starting into stock markets. Maybe it's not such much of a joke. I mean, here they own 9.2% of the bond market, and their assets are worth 35% of the Eurozone GDP. Let me tell you, people, this has never been done before in the history of mankind, this type of finance. I really hope these people know what they're doing, or it's going to end extremely ugly if they do not, or if their theory is completely wrong. But let's hope for the best. Anyway, let's get to our correlation trade. Like I said, we had 40% of our normal size in euro yen. We were long, and we were correlated it by being in 30% of our US dollar short. It's a way of taking off the risk, right? Or taking off a majority of the risk, or the directional risk, I should say. So we were looking to go long the euro yen. We knew dollar yen is extremely strong, but the call, how can I explain this? The call was in euro yen. We wanted to go long it. How to offset some of that, or a majority of that directional risk, is take something that it's correlated with. Could be, I believe, Swiss franc, Japanese yen is highly correlated with euro yen. But with the dollar yen, if you looked at the chart of correlation, they were actually became much more uncorrelated than Swiss franc yen to euro yen. So with that said, we decided, okay, I think euro yen, if I remember correctly, off the top of my head, euro yen is about 10%, 8% more volatile than dollar yen, somewhere around there. So we're going long the euro yen. So let's offset the directional risk by being correlated with dollar yen, but obviously not 1-to-1. Euro yen is more volatile, and even if, since it's more of a scalp type correlation trade, we're not just taking a pure correlation. We don't want it. Let's even go lower than that percentage that euro yen is more volatile than dollar yen. So we went 80%, approximately 80% of the position side that we had of the euro yen. So it comes out that we had 30% of our normal size of dollar yen, to make the position sizes easy to put on and calculated and whatnot. So you can see what happened here. We're long euro yen, 121.782. Only went against us maybe 10, 12 pips, and then started to rally. And obviously with dollar yen, we're being short and it's going to go against us. And we can see what happened here. The the euro yen rallied, pulled back slightly, and then really went into consolidation mode. If you look at dollar yen, it rallied, went into consolidation mode, then started to break down. So as it was breaking down and as euro yen was staying in correlation, staying in consolidation, that correlation that was somewhat wide started to narrow. So we ended up closing out with 73.1 pips on euro yen, or size adjusted 29.2. And on dollar yen, we lost 63 pips. But again, we only had 30% compared to 40% of here. So it comes out to 18.9 pips. So overall, picked up 10.3 pips on a size adjusted basis. So nothing wrong with that, right? You love these trades. We do have another one that we put on between Aussie dollar and Kiwi dollar, which we're up, but we're up very slightly. Not enough to justify liquidating it yet. As a matter of fact, we're up on that, even though the call, like the call was in the one pair that the call was in, it's actually not working out for us, but the other one's moving faster. So we'll see what happens there. But these kind of trades are beautiful to alleviate a lot of that directional risk. Of course, they're not always going to work, and especially if you're going to treat it like a scalp type correlation trade. You could get stopped out if what it does is it allows you to give you more wiggle room. So in other words, with euro yen, if I was just long this, and I'm saying to myself, all right, I'm willing to risk 30 pips on a full scalp. On a full scalp, if this thing goes against me and stops me out, 30 pips is not very much. But by being correlated with dollar yen, if the euro yen does go against me by that 30 pips, it's not going to even be 30 pips because the dollar yen will most likely be profitable somewhere in the tune of 20 to 30 pips itself. Yes, we don't have as much size, but the overall position would only be, instead of being down 30 pips in the overall position, I might be down 10 or 12 pips, giving me or allowing the euro yen a lot more wiggle room if that was the scenario. As it turned out, it was not. I explained what happened. So we'll take it, and we'll move on to tomorrow. If you're still trading now, good luck if any signals come out your way. And if we get some action tonight, tomorrow morning, we'll do another video. Have a great rest of your day.